Folks, welcome to a quick video analysis of the stock of KARO. KARO is the ticker symbol, trading on the NASDAQ, and we are very, very bullish on KARO stock. And in fact, we began bull operations on KARO as of yesterday. Now, back on July the 19th, I published a video on AppLovin stock. Now, for those not familiar, AppLovin is a competitor of KARO. Not that they are in the same segment, but they are both in the same sector, computer software specialty enterprise. In fact, AppLovin is ranked number 1 in that field, KARO ranked number 2. Now, you may be asking, why didn't you go with AppLovin stock? Simple. I like the setup of KARO better. Now, we'll go over both of those charts for those that are curious about AppLovin stock and as to whether or not it's going to go up higher, and AppLovin, what's the difference between the two setups. So let's get to it. So on July the 19th, I did a video on AppLovin stock. I'll link to it in the end. I don't want to spend too much time on AppLovin because the focus here is on KARO. But ever since I did that video, if you take a look at the performance of AppLovin stock back in July, remember, I did that video on the 19th of July. The first trading day thereafter was the 21st, and the stock of AppLovin is up nearly 82% since that time frame. That setup back then was a Bollinger Band squeeze, meaning very, very tight consolidation, strong fundamental stock, and the stock continued to trade sideways. You had a liquidity flush here, meaning institutions that wanted to buy the stock first took out all the stop losses that were below here. They bought it up, and ever since, they have never looked back. The path of least resistance remains to the upside on AppLovin. Now, we did have a breakout on Friday. We pulled back a bit, and we broke back out. Do I think that AppLovin stock is moving up higher? Absolutely. If you don't agree with me, leave a comment below and tell me why. But I like AppLovin. I think it's still going to move up higher. Great fundamentals, great company. But I want to talk to you more about KARO because I think what we have here is a better risk-reward setup. Ever since July, when I did the video on AppLovin, KARO, and by the way, we're using TrendSpider. If you love the functionality that TrendSpider gives you, I'll show you in a minute. Link below. Get 35% off of your membership with them. Automated technical analysis. This is great for new investors that aren't sure how to draw your trend lines, or if you're an experienced investor like I am, if you want to validate that you're not missing a support and resistance level or that you're accurate with your manually drawn trend lines, this is your fail-safe product to make sure that you're not buying into resistance and you are not selling into support. So let's bring up KARO. And if you're watching this on Twitter and Facebook, link above for you to get that discount as well. Okay, so back here in July, the price action of KARO was terrible. It was honestly horrible. You did not have the Bollinger Band squeeze set up. So it wasn't even on my radar screen at that point in time, but I've been watching it ever since to see whether or not we're going to begin to get a breakout. And last week, and I've been going over this chart pretty much every night with members on Market Wrap, and just to keep an eye on it, because I knew it hadn't run yet. It was getting ready to break out. And then slowly but surely began to see these breakouts from a nice sound base here. We began to put in higher lows and higher highs. Then what had happened was let's go to the daily chart. Last week, we began to form a bit of a bull flag setup. You know, you saw it similar back here, saw it back here, saw it back here. This is the same setup. It's called stair-stepping up higher. And we saw a breakout on Thursday, yesterday being Friday. We saw a continuation move. I just think that this has a more sound base from which it is breaking out of rather than AppLovin. AppLovin's really, again, has already run over 80%. KARO only 14%. Both have strong fundamentals, and I think that we're just getting ready for a rip-your-face-off rally. Add to that the mid-cap space last week, MDY, we'll use that ETF, it had on Thursday, broken down below support. But by the end of business on Friday, it had managed to recapture support. So that tells me that the mid-cap space, it wants to move up higher. There was no panic. There was no institutional selling of the mid-cap space. Therefore, it was able to recapture support after one day of trading down below it. So I view this as very bullish. So we have the mid-cap space showing signs of strength. We have the individual stocks, AppLovin, KARO, all showing strength. So what are we doing? We're trading along the lines of the path of least resistance. We're not fighting the market. Now let's go back to AppLovin for a moment. Now let's go back to KARO for a moment, and let's talk in greater detail about the fundamentals. Let's go to a weekly view, and let's overlay some trend lines here. And as you could see, what we did last week, I'm going to get rid of these two lines. There we go. So as you can see, the week before last, we broke out above, and I mentioned earlier, the automated trend lines, click of a button, right there. I didn't draw these lines. This is the algorithm that does it. As you can see, the week before last, we had broken out above resistance. Last week, what did we do? We pulled back, retested support, and we closed at the highs of the week. We bought it yesterday. We're already up on the trade. So we're trading along the lines of least resistance. That path is clearly to the upside. Now, we do have resistance up here at 58.01. If we manage to get through 58.01, we're heading up to probably around $70 per share. It all depends upon how long it takes to get up there. But here is the upper band of resistance. So our strategy here is to hopefully enjoy a short-term swing trade. Why is it a short-term swing trade rather than an investment? Simple. Because on the 9th of October, KARO announces earnings. Now, I'm not going to buy a stock and hope that it has strong earnings. You know, we have stocks where we're up 15, 20% on, and I'll hold them into earnings because A, they're not as volatile. B, I have a cushion. I have a profit cushion. So even if it falls by 5% on earnings, I'm still in the money. I'm still making money. Here, I'm just making a few bucks on this trade, and I don't want to hold it into earnings if I've already made a few bucks. I want to make them real, and then I will reevaluate after earnings as to whether or not I want to be long or short of the stock. Another way of doing it is if we do see a nice profit in advance of earnings, I may just put a collar on that trade. It's an option strategy where you're just neutral on the trade going into earnings. You miss out on any upside, but you also don't get crucified if the stock drops. You could also buy puts against the position. If you're directional, you're still bullish on it, we could go that route. So a lot of things that we could do here. Right now, it's a short-term swing trade for us. And let's take a look at the fundamentals here. Then we'll go to the daily chart of KARO. Earnings per share last quarter, 26%. 3-year EPS growth, 18%. Return on equity, 32.3. Folks, that's beautiful. If you get the high teens on ROE, you're doing a good job. That means the management is very, very good. Little to no debt here. I wouldn't even call this a mid-cap stock. It's borderline small-cap stock. It's only $2 billion in market cap. It's reasonably priced at 27 for this type of earnings growth. Let's go back to the technicals and let's talk about the daily chart of KARO. And you can see here, again, using the automated trend lines, click of a button, that we're going to have resistance at around 56.95. If we close above that resistance level, I would be willing to add more to the trade, and we'll send out an alert to members if and when we do that, because I think that we will soon thereafter be heading up to around $57, $50, $58 per share. And I just happened to realize TrendSpider is having a 45% off sale. That's even better than my deal that I give to you. So use that link below on YouTube, link above on Twitter and Facebook. Now they have 45% for a fall sale. Very, very nice. Take advantage of it. Okay. Let's go to the seasonality widget. I want to see September is not a great month, but this month was a good month. October, and keep in mind, this has only been a public company since 2021, so you really can't rely upon seasonality all too much here. It's just building history. October's been a very good month, as has November over the past several years. But again, not a lot of data here on seasonality, so don't rely too heavily upon it. Now, we'll close this out with a look at a 4-hour chart to get a vibe for how they're going to open the stock up, perhaps as soon as Monday morning. And what we're looking at here is a very, very tight setup. We've been loving this 56, let's just call it $56 a share level on KARO, just consolidating nicely. We had broken out above it here on the 18th, retested it, recaptured it, tested it again on Friday, and that's when we entered the position to the long side. Let's get more curious. I want to drill down to a 2-hour view. We're not day traders. I'm not going to do a 15-minute view. And you can see, again, we're tightening up here. I think that we're getting ready for a move up higher on the week. So, members, I will be entering our entry point if we decide to add more into the positions page in the members area. We'll also be putting in there the stop loss point as well as the price target that we have on KARO. So do you agree with me or disagree with me on KARO stock? Leave a comment below. I'll definitely get back to you. I love the comments. Don't forget about TrendSpider, 45% off. Get that fall sell. Use the link below on YouTube, links above on Twitter and, X and Facebook. And we go live, folks, live every Sunday night. Please join us there, 6 p.m. Eastern Standard Time. I'll see you on Sunday Night Futures Live. Till then, be well.